What's going on, traders? Welcome back to the weekly Forex Outlook and Reviews. I hope you're doing well. This week, we're going to be going over 10 pairs as we usually do and just refresh our minds to see what potential opportunities we can be looking for next week, what currency pairs are stronger, where attention should be focused. And yeah, let's see if we can make some more money. This week has been absolutely phenomenal. And all I can say is this is why we're traders. We practice the art of patience and discipline. And then when the markets decide to move, we capitalize and we make some serious dollar. Now, there has been some mixed reviews last week in terms of the news. So how that's going to impact next week is definitely going to be very interesting. But I'm going to keep my eyes peeled with the oil situation and the rush to fill up cars and whatever else. I think that we're going to have some serious volatility in the markets. We might have some really overextended markets. We might have some slow markets. But I think overall, we're going to have some serious fluctuations in terms of manipulation, in terms of inflation, in terms of many other things. So let's see what happens there. What I want to do is I just want to manage your expectations. The reviews, of course, stand for at least 24 to 48 hours. So if this is the first time you've been watching this, welcome to the channel. Subscribe if you're new, turn on notifications, and please hit that like button if you do enjoy the content. But just remember, make sure every single morning you wake up, you check your charts, you clear them, you look for a new bias or a new understanding of the markets, and then you look to plan your trades. Don't just take what I'm about to tell you and then come Thursday, you're going to look at it and say, Rock said, look here, this is where price is going to bounce off of. And then the whole behavior of the market has changed. And all of a sudden you're selling at resistance, but the pound is strong and price is about to absolutely smash for it. And you haven't recognized that because you haven't done the simple task of waking up in the morning, clearing your charts, and making sure that you're understanding the new consensus or sentiment, should I say, of the markets. And the markets being this here, which you can see are the pairs that are in front of us. So let's just take a look at the news for last week. So here we have the news for last week. Now you can see there has been some mixed news. We've had some negative news for the euro, but the euro hasn't really responded to this. We've also had some negative news for the pound, but the pound hasn't really responded to it just yet. This was on Thursday. We've also had some actuals for the dollar. We can see that the market did respond to it a bit, but not as much. And then we have some news here where we have some positive and then some negative. Now, look, I'll be brutally honest with you. This is not my forte. News is not my forte. What I do know is red means bad, green means good, meaning strength and weakness. That is all I need to know. And what I then do is I look at the sentiment of the market as a whole, using correlation, currency strength, and structures to then find the confluences that add to what I see here. Look, the point is this. There has been mixed reviews. So what I'm expecting next week, and remember my expectations is just of my own opinion, but what I'm expecting next week is to see some uncertainty and then eventually some really strong moves. Now, just remember, just like this week, we've had 2 days of really strong moves. You only need 1 or 2 days of strong moves per week. So if that means that I have to sit and wait patiently on Monday and Tuesday to then take an absolute banger on Wednesday, that's what I'm going to do, baby. I'm going to be super patient. Last week, we were super patient, and sometimes you capitalize and sometimes you don't. It's just what it is. It's part of trading. Let's see what's happening this week in terms of the news. So here you can see this week, we have quite a bit of orange fold news. I do suspect that this will have a slight impact, but not too much. And then most of the red folder news is coming in on Friday. Now, as the markets open today, so if you're watching this on Sunday, you'll see that we have some German federal elections all day. That clearly will have some sort of impact on the euro. And it'll be really good if we can see some oomph, because we haven't seen much of it from the euro. It's been a bit boring to trade, but then again, you only really need to trade the dollar and the pound. And then moving into Monday, we have some orange folder news around the New York session, as you can see here. And then moving into Tuesday, not too much going on. Again, late in the evening, and by that time we should be out of the markets. Wednesday we have some talks again in the evening, so we should be out of the markets by then. And I just think Friday is the day where we have the GDP for the CAD. That'd be really interesting. And then we had some core PC price index at around the same time for the dollar. You know what? I think it's going to be a half decent week. But of course, let's judge it day by day. Let's head back to the charts. So traders, without further ado, let's go through the process of how we're going to start to break down the markets here. And then let's put it all together towards the end. Just remember, the aim of going through the markets on a Sunday is just to get an overall consensus of what directions we can be looking for, how we can plan to take those trades based on the current behavior and or the previous behavior. Find the correlations with the other currency pairs in terms of their strengths and weaknesses, look for those confluences, and then make plans. So let's start this process. We have here pound USD. First things that I'm looking at here with pound USD is I'm identifying that the structure of the market has clearly been pushing to the downside. Now, if you took advantage of this, really well done. This was absolutely mind-blowing, this period here last week. And to be brutally honest with you, the week before. And to be brutally honest with you, we can see that the markets haven't really shifted in the direction of this bearish structure. Now, we did have a period where the market was pushing bullish also. That was very epic as well. But you can see that the previous lower high that was made is still being respected and price is trading below it. Now, this is not telling me much at the moment, other than the fact that the behavior of the market is still bearish in line with the previous behavior, which could have come from the news maybe 2 weeks ago or whatever it may have been. But we definitely know that this is still a continuation off of the prior week's sentiment. So what we have to identify here is that the market has recently just broken a previous high. This is a sign of a behavioral shift. Okay. And when we have a behavioral shift like this, what we are anticipating, not confirmed, is that a higher low can be formed before the markets continue bullish, especially when a structural high has been violated. This is invalidate the seller's bias and now initiating the bullish bias. Again, not confirmed, but we're getting there. So what we need to see now is we need to see the continued bearish behavior kick in. And how we can do that is by identifying price breaking a structural low, which will be an intermediate level or a major low. Once we have a major low break, we have what we call a continuation of the overall trend, because after a lower high is formed, as part of a downtrend, you have a new lower low. So with that being said, we have to ask ourselves, is it time to look for trades now around these areas here where price is failing to break? Or is it best to wait for the market to break a major low first to then continue this overall bias, which is a downtrend? Well, I personally would say this. You have an area in the market where price has created what we call a consolidation or a range. If you look at the volume of these candles, they're very wicky. There's not much volume to the upside or downside. There's been no clear trend within this area in the market until this point here. And then we saw the market push bullish. What we anticipate is when the market pushes bullish is we anticipate, especially after a break, a higher low to be formed before a continuation higher. If the market breaks back into this area, what you can find is that the market will continue to range again, because the orders where price was filled from was this low. So if you plan to sell the market within this range, it's not wrong, because you have enough range back to the downside before price can collect more orders again and fly up, and or the orders can have already been collected. Price could have eventually stopped traders out, and now you will see the overall continuation of this trend continue down, something like this. Now, look, I'm not big on trying to identify where orders sit, but you have to understand there's behavioral patterns that illustrate the overall behavior of traders in the market, especially from an institutional level, where they identify where sellers could be sitting and where traders can be stopped out before then continuing the market, especially when price does not come back to respect structure and continue up, but rather breaks back in with so much force. And then we have to then obviously wait for the break of the lows here to see that the actual movement of the markets are pushing bearish, and or we need to see price break the structural lows to confirm that, to see a continuation of the market pushing bearish. So the idea here is this: for me personally, I cannot disregard the fact that price has broken out of this area and has broken back in. If the market is going to continue pushing bullish, then okay, let's create a structural high again. Let's get out of this area. Let's break the structural high. Let's confirm the bulls are in the market. And then I can look for the retest of the structure before a continuation higher. If the markets don't do that, then the second plan of action I can wait for is for the market to continue to respect its own higher low and confirm that, and then create what we call a double bottom of this structure. I would then view this as my structural low, higher low, area in the market where price has created a higher low. I'm respecting it for a double bottom continuation higher back to this high. If that doesn't happen, then the only other plan of action that I'll be waiting for is for price to break this structural low, look for the retest, and then I'll be looking for a continuation down. Now, some of you might be asking me, would you look for a double top in and around these areas here? To be brutally honest with you, no. What I would be waiting for is if the market decides to continue back to this level, based on the fact that we have a structural low, potential higher low, what I'll be waiting for the market to do is come back, respect this area, create the new break of the brick wall, and then potentially look for a double top confirmed as part of the new behavior, or even better still, look for the break of the low and then a continuation down like this. Okay, so the plan of action is as follows. I'm looking for price to create the double bottom of this area here at 36.65, a break of the high in line with the current behavior, which is a break of the structure, a break above 37.51 and a retest continuation, or a continuation of this overall bearish move, which is a break of the structural low and a retest continuation. Now, you know what I'll be doing while this is playing out? I'll be sitting back and I'll be chilling. There's nothing else I need to be doing here. No overthinking, no anything else. Anything that happens between 37.51 and 36.65, I don't care unless price comes back here cleanly enough or breaks above cleanly enough. And anything price does between 36.65 and 36.10, I don't care about unless price comes back to or breaks 36.10 clean enough and then comes back to it for a retest for continuation. So that's my plan with pound USD. Next pair we'll take a look at is Aussie dollar JPY. Now we have kind of the same scenario here. You can see that the overall trend of the market has been pushing bearish. We can see that the market has just recently broke above a lower high formation, or better still, the last lower high that formed the last low. The overall behavior of the market has been bullish into the close of last week. Actually, in fact, for the majority of last week, funny enough. And you can see now price has broken above this structure with an immediate break back in. This certainly doesn't mean much, because if the trend of the market has now created a structural low, a new high, and broken above a previous high, we can anticipate price to come back to this level for a retest. So let's bear that in mind. What we also have to identify is that the overall structure of the market has been pushing bearish for a very long period of time. And as you can see here now, this is the first time that the market has created such a bullish move to the upside. The behavior has shifted at this moment in time to being bullish. But as price is broken back below the structure, we now no longer look at this as the retest level in the market. We look at the last lower high in the downtrend that price recently failed to break and broke above to then look for the retest. So my plan of action with Aussie dollar JPY moving into the start of next week, as we have broken back into structure now, is to see if price comes back to this key level to respect it. If it does, then we can look for a retest of this structure back to the structural high as our first range, management level, target levels, or whatever it may be. If price trades between the retest level at 79.78 and the structural high, which is 80.67, I'm not looking to do anything. The only other plan of action I'm looking for is if price doesn't come back to 79.78, is to look for price to break above this key level here. And then once we break above, let's get this drawn in properly. Then I'll be looking for the retest and then the continuation higher. So you notice here, I'm not doing anything extravagant. I'm keeping it super simple. I'm waiting for price to come back to major key levels every single time. And then once price comes back to a key level, I'm looking for the reaction. I'm not looking to trade the in-between levels, or as I like to call it, the intermediate levels, because you're just playing a guessing game. You want to understand that the behavior, firstly, is continuing in line with how you've looked at the markets and plan to take your trades. And you want to add the confluences, which will include things like key levels, candle patterns, and patterns for your trading. If you trade in between, then you're avoiding everything else and you're taking a stab in the dark, as it were. So the plan of action is as simple as this: wait for price to come back to 79.78 or 80.67, break above retest continuation. And we'll keep it that simple. We still haven't done one of the most important things yet, which is add confluence, but we'll get into that, I'm sure, in about the next 5 to 10 minutes or so. All I want to say to you guys is if you're enjoying the content, please hit that like button for me. Get these videos up to 1,000 likes. We're not getting that many likes on the my content or the content that I'm creating for you. And I would really, really wish if you could just hit the like button. It takes you 2 seconds. It takes me about 2 hours to record this, edit it, and get it uploaded for you guys. It takes you 5 seconds to hit the like button for me. Subscribe if you're new to the channel so you get access to all the other content in the near future and you continue to support the growth of the channel and also turn on notifications for when I post my next videos. Let's move on to the next pair. So the next pair we'll take a look at is pound JPY. Now, what we're seeing with Aussie dollar JPY is a slight weakness. What we're seeing with pound USD is that bullish behavior, but not yet confirmed. Now, what I'm thinking about here is the move on the pound just an impulsive move to the upside to correct the move that happened the week before? Don't know. You know, the way I see this is the market has failed again to break structural lows. We can see prices broken above the structural high, lower high, but now we've come into an area where buyers and sellers were sitting, deciding whether we're going up or down before we eventually had that shift. Now, it could be news, it could be anything, it could be orders, it could be banks, it could be institutions. I really couldn't care less. The point is this: we're sitting back in the area where orders could be sitting, and the question is this: are we going to continue bullish? Or is the market now going to correct back down to the lows before continuing higher or eventually break the lows? So many options here with this one. What we need to first and foremost accept is that price is failing to break the high. That is the first thing we have to accept. The second thing that we have to accept is that the market currently is ranging. Now, this could just simply be an exhaustion phase with a move to the upside here. This could simply mean that buyers are taking profits. This could mean that sellers are stepping into the markets. Could be absolutely anything. The point is this: the principles or the concepts is this, or the rules, should I say, whatever you want to call it, is that you don't want to be selling in ranges, especially when they're this messy. So the best plan of action is this: we're going to wait and see if the market breaks the highs. If it does, then we take out stops, we look for the retest, and we look for the buyers to continue pushing this market up in line with the previous behavior last week. If that happens, then all well and good, we're on the right side of the markets. In terms of confluence, what we're looking for here is we'll be looking for pound USD also to continue to respect the structural higher lows and then break above 37.51 in line with this bullish behavior. We don't want to see this pushing bearish. We want to see this pushing bullish. We'll add confluence to the break above 151.88, and then we can confirm that we're more than likely on the right side of the market with the buyers than we are with the sells. If the market does not break above 151.88 and continues to respect these structures here to the left, then what we're going to need to see the market do is shift with convincing bearish candles. And then we can look for price to come back to the consolidation itself, where price is recently tapped into. And then what we can look for is a retest of this level before a continuation down. The way we add confluence to this at this stage, seeing as we're not going to be looking for price to break the lows because of how far it is away, is we're going to go to pound USD here. Let's add this in. We're going to go to pound USD here, and we're going to see the market eventually start to smash through 36.65 and or 36.10 to then add the confluence we're looking for here to look for the sells at 151.14. Remember, what you're looking for, traders, is for price to leave structure for a period of time, eventually come back, then retest, then anticipate the continuation down. Don't just look for the immediate breakout, the retest, and the continuation, because the behavior is not confirmed yet. You have to understand at this stage that there's a very high chance that price, based on the behavior that we're, or the confidence that we're seeing with pound USD, that the market could pull back to make the higher low retest here and then continue bullish. So, as I said, this just comes off of the back of the tricky news from last week. We had some good news and we had some bad news. And at the moment, we're just still trying to confirm that news and figure out what our plan of action is in terms of whether we're buying or selling these markets. A little bit tricky, just a little bit tricky. But just stay patient with the markets. As I said, the prior week, we had some beautiful movements. In last week, we had some beautiful movements as well. So when the markets are ready to move, you'll be able to capitalize. We do go through periods when the markets are moving sideways, where the markets show strong signs of volume and momentum, and just sometimes where the markets just do nothing. In the moment, we're doing nothing, and we're still trying to confirm our bias, so be patient. Next pair we'll take a look at is USD Swiss franc. So the structure of this market has been consolidating. Now, as I said, this can be a sign of buyers and sellers battling it out here, looking to confirm their orders and figure out which way they're going to absolutely destroy us retail traders. I mean, they don't sit there, I guess, thinking about us all day long, do they? I think it's more focused towards the economy and whatever else and however else they want to do this. But the point is this: buyers and sellers are definitely not showing any sort of control here over the moving sideways. The overall behavior of the market, well, what's happening? We can see with pound USD that the structures in the markets are pushing more bullish than they are bearish. So this is showing signs of dollar weakness. We haven't looked at any other dollar pairs yet, but what we can see here with USD Swiss franc, the overall sentiment of the market has been showing strong signs of dollar strength. Now, for the first time in a very long time, we have a very, very deep pullback. And if we look at the pullbacks here compared to the previous pullbacks, it's definitely outweighing what has happened before. That being said, are we starting to see a sign of weakness with the dollar? Well, look, I'm an intraday trader, so I'm not bothered about what happens by next week, Friday. I definitely don't care what happens by the end of the month, and I definitely don't care what happens by the end of the year. I literally intraday trade. So I'm just looking for today's behavior, and then I'm looking to capitalize on that. So at this moment in time, what I'm seeing is that the overall behavior of the market is showing no signs of either bullish or bearish behavior. And that being said, what I'm going to be looking for now is for a shift. Now, I think the air conditioning just got turned on. So if you can hear it, I do apologize, but I think the quality of this microphone should be able to pick me up clear, loud and clear. So what I'm going to be doing is looking for a shift. Long story short, traders, I'm looking for price to break above these structural highs, or I'm looking for price to break below these structural lows. Once I have the shift, then I will add confluence by looking over at pound USD, Euro USD, USD JPY, USD Swiss franc even, and just say to myself, well, what's happening? Can I identify the overall sentiment of the markets today? And if so, is there likely to be a continuation of that breakout move? I'm looking for a candle close, of course, because that's where the confirmation is going to lie, or the evidence at least, and then I'll start looking deeper for the confirmation. As of now, it's ranging. I'm walking away, and we'll trade easier pairs moving into next week. Next pair we'll take a look at is Aussie dollar USD. Now, we're adding a little bit of confluence here to what we're seeing with Aussie dollar JPY and also the dollar. We can see here that the dollar has been pushing bearish for a very long period of time. But what we are starting to see is that price is failing to break the structural lows. We're seeing a shift and we're seeing bullish behavior, but we're seeing immediate reaction to a previous level in the market, just like we are with Aussie dollar JPY. We had that area of consolidation that price has come back to, and now we're starting to consolidate again. What does this mean? Well, does this necessarily mean that the US dollar is gaining strength again? Or does that mean that Aussie dollar just had an impulse move that's now going to be corrected and we're going to have that continuation of the overall trend bias, which would, in theory, identify to us that the Aussie dollar is weak? Well, at the moment, what we've seen here is that the Aussie dollar has been weak. We see this impulse move, which could have just come off the back of news. So the answer is, or the question is this: is the market going to continue to respect the higher lows and break the highs to continue with this bullish theme? Or are we going to see, with the confidence that we get from Aussie dollar USD here earlier on, that the Aussie dollar is certainly weak and the ideas are to look for sells? Well, this is what we can do. And this is what's really interesting about price action. We must respect and continue to stay true to what the structure tells us on whatever time frames we're trading until we're proven wrong. At the moment, price did break above a structural high, indicating bullish sentiment, just like with Aussie dollar JPY. Here we respected the previous lower high, which is indicating Aussie dollar weakness. We need confirmation of that, which is a break of a previous structural low and a retest and continuation. If this happens, I'm looking for sells. Now, some of you might be screaming, well, Rox, you're looking for buys in Aussie dollar JPY. Well, no, I'm just making a plan. So I have a plan for buys in Aussie dollar JPY if price respects structure. If price doesn't respect structure and price starts to break 72.29 here in Aussie dollar USD, then I have confidence, because if I'm looking for buys on Aussie dollar JPY, but it's failing to maintain or hold the levels that I've put in there as part of my plan, and then Aussie dollar USD starts to continue to respect the structures of the market structure that it's formed here and go down, then I can say, well, hold on a minute. Aussie dollar yen wasn't really bullish. It looked bullish, but that might just have been an overextended market, an impulse move that's now corrected. And now that I'm seeing it's not respecting buy structures and Aussie dollar USD is breaking the structural lows, I have so much more added confidence to now look for continued sells on both pairs, because the buy structure has been invalidated and sell structure is being respected on Aussie dollar USD. And now that price is breaking the lows at 72.29, I can confirm that even more and now have more confidence and say, well, look, it's time to sell it. And that's where I find myself on the right side of the market more often than not, because I'm not the type of guy to say, or trader, should I say, to say Aussie dollar yen is buy bias. Oh, look, that means that Aussie dollar USD must respect 72.29. Let's buy it because it's tapped it 3 times and now it's going to find support. And make a plan as part of structuring the behavior. If it's respected, it is. If it isn't, it isn't. Even if I have 2 slightly different biases, then guess what? One will add confluence to the other eventually, and then I'll take the trade. But if Aussie dollar JPY starts to respect the structure and continues bullish, but Aussie dollar USD starts to go bearish, then I'm going to be like, something's not quite right here. And I'm going to stay away from the markets. Or I might make a judgment call based on some of the other confluences that USD and JPY are weak, but I have to gather the confluences elsewhere. Again, I'm not going to go into too much detail about that because that is obviously a big old long story here, but that is how I approach the markets on a daily basis. And like I said, last week, we made some unbelievable calls just based on using that simple technique. It's not easy. You have to practice it. You have to understand it in full details. But this is what really gives me the edge in the markets. So trust me when I say this. Even though Aussie dollar JPY has a buy sentiment and we plan for buys, and Aussie dollar USD now we're planning for sells, trust me. Just trust me when I say this. They work hand in hand. So this is my plan with Aussie dollar USD. And remember, this analysis stands for 24 to 48 hours. So you must clear your charts Tuesday morning and redo this whole process again. Let's move on to the next pair. Here we have USD JPY. Now, what are we seeing here? We're seeing a weakness with the yen. We're seeing strength, of course, with the dollar, but that is not being illustrated across the board here. If we take a look at pound USD, we can see that the overall sentiment of the market was bullish. Now we're correcting. We are, however, identifying that there could be a recovery of the dollar here in terms of this move to the upside. Aussie dollar JPY, what are we identifying? Well, we're identifying a weakness because the Aussie dollar pushed bullish after a very long period of time with the market pushing bearish. If we go back over to USD JPY, we're seeing a weakness in the yen and we're seeing signs of dollar strength. What we're seeing here is potential signs of dollar strength. And here we're seeing no signs of dollar strength. So what could that mean? Again, it's very important you understand these in order to be able to trade in the markets. Is the dollar strong? And if so, is price going to break 72.29? Or is the yen really weak and is Aussie dollar going to continue bullish? Again, we're not getting concrete evidence, but we're gathering enough to identify something here. The dollar across the board is showing signs of strength. The yen across the board is also showing signs of strength. That could mean one or two things. It could mean the market could pull back to at least 50% of this move for a retest before continuation, or the markets can create the pullback and then create the respect of previous structure before continuing down. The point I'm trying to say here is this, and this move is unbelievable. I called buys from this level here. I think it was this level here. I'm not even going to go and check it, but I think I called buys from this level here, and the market just literally left without us. I was looking for a retest of the structure. Oh, I know why this happened. I remember clearly now. It was the news, wasn't it? That's why this market pushed bullish like that with yen weakness. And I think this was the move here, wasn't it? This was the move here. I was looking for the break above this level, and we didn't get it before the close of London session. So I opted out, but I called this level here as the retest level, looking for a bullish close. That was after the news. And then look what happened. The market continued pushing bullish. It just is what it is. Sometimes, even if you plan it, you miss it or you can't take it because things just don't line up with how they're supposed to line up as part of your strategy. Anyway, whatever. Point is this was the news. I remember it clearly now. Best plan of action, probably just wait for a recovery. I'm not even going to lie to you here. This is a little bit baffling, even for somebody who's been trading for 10 years. I know why it's moved up, but I don't want to be the brain box or the scientist behind trying to figure out what it's going to do. I'm going to give this a red flag simply because they're easier structures to be found, to be traded. Aussie dollar yen is showing signs of weakness, but then we have Aussie dollar USD showing signs of dollar strength. Then we have pound JPY showing signs of price fading, continue pushing bullish, etc., etc., etc. I think that we need to just wait a little bit more to identify or differentiate the strength and weakness between the two. Let's wait for that. Next pair we'll take a look at is Euro Yen. Now, the overall sentiment in this market, again, is supporting that yen weakness, which is absolutely fantastic here. But what we want to see is confirmation of that. So just like some of the other pairs that we've taken a look at, we have broken above this structure. I would really like to see price leave for a period of time and then eventually come back to this retest area. I think now I would focus my attention on this being the area as opposed to the retest area now, because if this is the area where price is going to shift from as the higher low, then that's where it's going to come back to shift from. Just as simple as that. Now, understand something, price is allowed to come back to around a 50% range here, and you can wait for price to pull back deeper to look for those trades. I think for now, what I'm going to be waiting for, especially when it comes to having the yen as a currency in the pair, is to see if the yen is really going to strengthen again or recover, or if it is totally going to just deplete and weaken and everything else is just going to smash it through the park. I haven't been a fan of the euro for a very long period of time, and I've traded or haven't really been trading it personally I have been focusing more my attention on like the CADs, the yens, and the dollars, and the pounds, of course. So we'll see. I mean, look, I'm getting a bit itchy here, moving around. I don't really like the structure of this market. I'm sorry if you trade it. Um, I just can't give you a bias. I'd be lying if I said that I could. I could. From an intraday level tomorrow, when the market's open and I can gather more information, I could easily give you a bias and call buys and sells all day long with no problems, no qualms, no nothing. Wouldn't even care if it lost. I just know I could call it better tomorrow than I can call it today. So I do apologize. We're going to put this one on the back burner as well with USD JPY. Let's move on. So the next pair we'll take a look at is USD CAD. I mean, look, USD CAD has been very easy to trade because of CAD strength. And if you're looking for a correlation or a pair to help you identify CAD strength, I would really recommend to you CAD JPY. Unbelievable pair. I was just about to swear there because it is unbelievable. If you want to trade a pair that correlates with the USD CAD, beautiful. I think they're opposite correlating. Yes, they are, but unbelievable. Unbelievable. Previous behavior moving in, shifting last week has been really bearish. This is showing signs of dollar weakness. Again, a little bit messy because the markets haven't really fully showed us that the dollar is weak. We're having some mixed reviews here, but what we do identify is CAD strength, especially with CAD, USD CAD. I don't even think I have CAD JPY as part of the list here, but as you probably see, this has been pushing bullish. And then here you can see this pushing bearish. I think I'm going to stick with the CAD strength. And I think what I want the market to do next week is start breaking some structural lows. Now, I am concerned that the market has created this structure here, which is a high low structure, which is a very, 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 very early sign of a bullish explosion more often than not, especially if price manages to break out of a structural high, you do then anticipate continuation. Very powerful pattern here. I think at the moment, what I'm going to want to see is price respect the previous structure, which it has previously done. And I'm going to want to see the market leave for a period of time. I'm going to ignore everything to the left here, but I want it to see it leave for a period of time, then come back. If it does that, then of course, I'm going to be looking to sell this all the way down. I'm so excited to see how USD CAD plays out next week. And I think this is one of the plans that I'm going to be looking for. If price continues to stay trapped again between this consolidation here to the left and then starts the consolidation again, it is what it is, baby. We'll just wait again to see what happens. But I think the first plan of action is to see 26.44 broken, look for that beautiful retest, and then see if we can get a continuation on the way down. So that's my plans with USD CAD. Next pair we'll take a look at is Euro USD. I mean, to be honest with you, Euro Yen, what did we do? Put it on the back burner. It just doesn't make sense. It just doesn't make sense. Euro strength, okay. We got news all day Sunday that could change the bias almost immediately. So let's see, this could fly up, it could fly down, it could just be a whole total mess. But what we're not understanding here is a strength versus the yen, which has been the core currency that we've been focusing on throughout this analysis, and the dollar, which has also been the core currency that we've been focusing throughout this analysis. And what we're not identifying right now is convincing euro strength, because we're seeing euro yen push bullish, signs of weakness of the yen, of course, and we're seeing that the euro USD is still continuing to hold bearish, respecting previous structures, identifying dollar strength. So I don't think we have euro strength. I just think we might have yen weakness. And at the moment, we're still here to confirm what is happening with the euro. So I think this is all in anticipation of next week, or should I say today. Let's see if we get a shift with the market breaking above some consolidations here. If you want to be absolutely convinced that the market is pushing bullish, then let the market break out of a structural high. It's much better, because this is the last area where price tapped into. Again, we talk about where the sellers are sitting. And as you can see here, this is where the sharpest move happened. So if you are looking for convincing evidence, you want to see price break this area first, then look for your retest continuations. And or if the market doesn't break above 1781 or respect the retest levels here at 1754, the sentiment of euro yen starts to line up with euro weakness and dollar strength across the board, then you're just looking for the break below the structure here, the retest continuation. Now, this is a 4H time frame analysis here, so this is some serious weighting. You can whittle this down to intraday time frame trading, but again, that is a strategy that I pride myself in and worked so hard to put together over the last 10 years of trading. So I'm not going to go into too much details about that unless you're part of the academy here. And this is not any self-promotion. I'm just saying, or any sort of promotion here. I'm just saying that if you do not know how to trade from an intraday perspective, or you're sitting there wondering why you'd have to wait so long to get a bias, that is the reason. Because in terms of an intraday, you have to be in the markets on that day to identify what's happening. And this is the importance of analyzing the markets again in the mornings or, yes, at the end of each session. If you are not experienced and you haven't taken enough trades and lost enough trades and practice following your plan, journaling your trades, and I suggest that these are always the best plan of actions. Yes, you have to wait longer, but trust me when I say this, the less trades, the less losses, and the more patient, the more likely you're going to learn more about how the market works, the behaviors, the structures, the processes, the patterns, the development, the confluences, absolutely everything. So now just focus on this. If you want to trade intraday, that's up to you, but this is going to be the plan with Euro USD. Next pair we'll take a look at, and this is gold. I mean, look, let's not disagree now that the overall sentiment of this market is bearish. The overall behavior of the market is indicating dollar strength. We are now showing strong signs of bearish behavior here. And I think we can make a safe plan of action with gold, looking for price to break some of these structural lows as part of a continuation next week. And if we do, you have a simple plan of action. I don't know if you're a retest trader or a breakout trader, a pattern trader. I don't know what trader you are, but the simplest plan here is to wait for 17.42.37 to be broken and to be respected before looking for a continuation down. So that would be the plan of action for the 10 pairs this week. We have some mixed reviews here, traders. We really do. We are identifying potentially some shift with the dollar strength that we've previously seen, but we're also seeing price hold and not convincingly show signs. Maybe because the way the behavior exhausted was towards the end of the week, which is what it is. You know, we have to wait for the market to talk to us. Are you going to be weak dollar is the question, or are you going to continue showing strength? Well, let's see. Yen, are you going to continue in strength, or now are you showing your first signs of weakness? At the moment, it looks like that, but let's see. Aussie dollar JPY. Here we have a buy structure setting up, not confirmed. Remember that it's not confirmed. So we could look for price to pull deep back into 79.78 or break above 80.67 to confirm that. Even though our Aussie dollar USD bias is the opposite, we just use them as confluences, and whatever plays out, we'll then add that confluence to each pair and then make another plan of how to trade it. Pound yen. Yen, are you showing signs of weakness? Pound, are you going to start showing signs of strength? By the looks of it with pound USD, you're trying. Here you're trying again. Let's see. Are you really weak yen? Are you really strong dollar? Or are you just strengthening pound? Well, let's see what happens with this plan. Are we going to break 151.88, or are we going to continue with respecting structures as we are now, breaking 151.14.5? Next pair, we'll take a look at USD Swiss franc. Dollar, you're supposed to be strong. We want to see a continuation. In theory, we want to see you break the highs. But if you don't, then boy, oh boy, maybe we will start to see strength with the pound. Let's see what happens. Maybe we will start to see Aussie dollar pushing bullish. Let's see what happens. Next pair we'll take a look at is Aussie dollar USD. We must respect the fact that price is respecting the previous lower high and is currently showing signs of bearish strength, which is showing signs of dollar strength. Let's see if we add confluence to this next week by looking for a break of 72.29 and then look for that continuation down. USD JPY. I don't know what you're doing here, buddy, but you're definitely showing that the yen is weak. But at the same time, it's only until the news came was you able to push up. Other than that, I think the yen was trumping, or should I say, pushing the market down. So for now, we'll keep you on the back burner until we understand what you want to do. For now, red flagged. Euro yen, red flagged. Reason being is because we do not know what's happening with the euro. Yen has been dominating, but it's only because of euro weakness. So let's see what happens with the news today. See if we see a shift. Let's see if we see a continuation. Maybe we can make a bias for buys, but for now, we just have to stay away. USD CAD. Now, I love the CAD. CAD has been super strong. Let's just continue to respect the CAD right now because boy, oh boy, you have been an absolute true beauty to trade. If CAD starts to continue pushing bearish, it doesn't mean the dollar is weak across the board. We still need to add confluence. But here with CAD yen, USD CAD, we have seen CAD is strong. And I think a great plan right now, based on the structure of this market, is 26.44 break, retest continuation. Then we have Euro USD. Again, we're not seeing strong signs of Euro strength other than versus the yen, which is showing signs of yen weakness, which we do understand could be happening across the board. We're still waiting for confirmation of that because the yen has really been strong for the past few weeks. So we want to see here now, is the euro really strong? Are we going to break 17.54 for a continuation higher? Or even better still, 17.18 for a continuation higher? Or are we going to continue with the same thing, which is the dollar strength, euro weakness, and break 16.86 for a continuation down? Final pair we'll take a look at is gold. I think we have to respect the fact that the dollar is showing signs of strength. The gold here has continued to break the consolidations to the downside, respecting previous structures, continue bearish behavior. And I think a simple plan of action is 17.42.37 break and a retest and a continuation down. Thank you for watching. Please hit that like button if you enjoyed the video. Subscribe if you're not yet subscribed and turn on notifications. And until next time, continue to trust the process.